The thrill of the hunt, your path to stock market riches. Are you ready to unlock the incredible wealth-building potential of the stock market? Picking the right stocks is the key to unlocking life-changing returns. This isn't about gambling or chasing get-rich-quick schemes. It's about becoming a savvy investor, one who understands the fundamentals of the market. Get ready to take control of your financial destiny. But before we get started, smash that like button and click on that subscribe button. Comment below what topic you would like me to cover next. Unlocking value. Why picking the right stocks is key. Picking the right stocks isn't just about making money, it's about building lasting wealth. When you invest in a company, you're essentially buying a piece of its future. Choose wisely, and you'll ride the wave of their success. By digging deep into a company's financials, you can make informed decisions. Get ready to unlock the secrets of successful stock picking. Unveiling the toolkit, your arsenal for stock market success. Knowledge is power, and in the world of stock investing, the right knowledge can be incredibly lucrative. Think of stock market research as detective work. We need our own set of tools to unravel the mysteries of the stock market. Ready to become a stock market detective? Let's go. Diving deep, understanding fundamental analysis. This approach is all about understanding the intrinsic value of a company. We dig deep into a company's financial statements, scrutinizing its revenue, profits, debt, and assets. By analyzing key financial ratios and metrics, we can gain valuable insights into a company's profitability and growth potential. This approach is particularly important for long-term investors. Stay tuned. Charting the course. The power of technical analysis. Technical analysis is all about studying price movements and identifying patterns in the market. We study historical price charts, looking for trends and indicators that can help us predict future price movements. This approach is based on the belief that history often repeats itself in the market. By identifying recurring patterns, we can anticipate future price movements. Technical analysis is popular among short-term traders. Stay tuned. Cracking the code deciphering financial statements. Financial statements provide a snapshot of a company's financial health. There are three main financial statements: the income statement, the balance sheet, and the cash flow statement. The income statement tells us how much revenue a company generated and the expenses it incurred. The balance sheet is a snapshot of a company's assets, liabilities, and shareholder equity. The cash flow statement tracks the movement of cash in and out of a company. Understanding these statements is crucial. Ratio revolution, unlocking key insights into company performance. Financial ratios allow us to zoom in on specific aspects of a company's financial performance. Profitability ratios tell us how much profit a company generates for every dollar of revenue. Liquidity ratios measure a company's ability to meet its short-term obligations. Solvency ratios assess a company's long-term financial health. Efficiency ratios measure how efficiently a company is using its assets to generate sales. Spotting red flags, warning signs to watch out for. Investing in the stock market isn't just about finding shining stars, it's also about avoiding potential landmines. Keep an eye out for red flags that could signal trouble ahead. One major red flag is a consistent decline in revenue or profits. Another red flag is a sudden surge in debt. Watch out for companies with consistently negative cash flow from operations. Pay close attention to inventory levels. Beyond the numbers. Uncovering a company's competitive edge. To truly understand a company's potential, we need to look beyond the balance sheet and uncover its competitive advantage. A company's competitive edge can manifest in various ways. In the world of investing, we often refer to a company's competitive advantage as its moat. A strong competitive advantage protects a company from competition. Get ready to sharpen your analytical skills and unlock the secrets of a long-term investment success. Moats and market share. Assessing industry dominance. One of the most telling indicators of a company's competitive strength is its market share. A company with a large market share generally indicates a dominant position in its industry, but market share alone doesn't tell the whole story. We also need to consider the size and growth potential of the overall market. Understanding a company's competitive positioning within its industry is crucial for assessing its long-term prospects. The innovation factor, identifying companies built for the future. In today's rapidly evolving business landscape, innovation is no longer optional. It's essential for survival. Companies that rest on their laurels, content with their current products and services, risk being disrupted by agile newcomers with fresh ideas and a finger on the pulse of changing consumer preferences. When assessing a company's competitive advantage, pay close attention to its innovation track record. Does the company have a history of developing new products or services? Does it invest heavily in research and development? Is it at the forefront of emerging trends and technologies within its industry? Companies that prioritize innovation are more likely to adapt to changing market conditions, meet evolving customer demands, and stay ahead of the competition. They're the ones constantly pushing the boundaries, exploring new frontiers, and creating the products and services of tomorrow. Look for companies with a culture of innovation, a pipeline of promising new products or services, and a management team that embraces change and encourages creativity. These companies are more likely to be the disruptors, not the disrupted, positioning themselves for long-term growth and success. Remember, investing is not just about identifying companies that are performing well today. It's about finding companies that are well positioned for continued success in the years to come. Innovation is a key driver of that future success, so prioritize companies that make it a core part of their DNA. The leaders of the pack. Why management matters. Welcome back, savvy investors. We've covered a lot of ground in our quest to master stock picking. We've delved into the nitty-gritty of financial statements, explored the dynamics of competitive advantage, and learned how to spot companies with the potential for long-term success. But there's one crucial piece of the puzzle we haven't yet addressed: the people at the helm, the management team. Think of it like this: even the most promising ship needs a skilled captain and a competent crew to navigate treacherous waters and reach its destination. Similarly, even a company with a fantastic product, a loyal customer base, and a rock-solid balance sheet can flounder under the guidance of ineffective leadership. A company's management team is responsible for setting its strategic direction, making key operational decisions, and allocating capital wisely. They're the ones who translate a company's vision into reality, guiding it through challenges and capitalizing on opportunities. Investing in a company with a strong management team is like having a team of experienced Sherpas guiding you up Mount Everest. They know the terrain, they anticipate obstacles, and that they're committed to reaching the summit. In the following sections, we'll explore how to evaluate the quality of a company's management team, delving into their track record, their leadership style, and their alignment with shareholder interests. Get ready to meet the people behind the numbers and make more informed investment decisions. Reading between the lines, assessing management quality. Now that we understand the crucial role management plays in a company's success, let's explore how to assess their quality. Unfortunately, there's no magic formula or standardized test to determine management effectiveness. It requires a bit of detective work, reading between the lines, and piecing together clues from various sources. One of the best places to start is the company's annual report, particularly the management's discussion and analysis section. This section provides valuable insights into the thought process behind management's decisions, their assessment of the company's current performance, and their outlook for the future. Pay close attention to the tone and language used by management. Do they sound confident and optimistic about the company's prospects, or do they seem evasive and hesitant to make concrete statements? Are they transparent about challenges and risks, or do they try to sugarcoat bad news? Next, delve into the backgrounds and experience of key executives. Look for individuals with a proven track record of success in their respective fields. Have they held leadership positions at other successful companies? Do they possess relevant industry expertise? Examine how long the current management team has been in place. A stable and experienced leadership team can be a sign of strength, while frequent turnover at the top could signal internal turmoil or a lack of clear direction. Don't hesitate to look beyond the company's official publications. Search for interviews, articles, and conference presentations featuring members of the management team. These sources can provide valuable insights into their leadership style, their communication skills, and their overall vision for the company. Skin in the game. Aligning your interests with company leadership. Assess management's alignment with shareholder interests. As an investor, you want the leadership to look out for your best interests. Insider ownership is a key indicator of alignment. Management with skin in the game has a powerful incentive to benefit all shareholders. Look for significant management ownership. Consider executive compensation and long-term incentives. Be wary of lavish salaries when the company underperforms. Pay attention to corporate governance practices. Ensure a diverse and independent board. Strong governance ensures management accountability. Congratulations, astute investors. You've now journeyed deep into the heart of stock picking, armed with the knowledge to analyze financial statements, assess competitive landscapes, and evaluate management teams. But the journey doesn't end there. The stock market is like a living, breathing entity, constantly evolving, reacting to news and throwing curveballs your way. To truly master stock picking, you need to become a news junkie, constantly monitoring the financial landscape for events and trends that could impact your investments. Think of it like being a savvy sailor, always attentive to the wind, the tides, and the occasional storm brewing on the horizon. Staying updated doesn't mean becoming glued to a ticker tape, obsessively tracking every minute fluctuation. Instead, focus on understanding the bigger picture, the macroeconomic trends, industry shifts, and company-specific news that can significantly influence stock prices. What moves the market? Interest rate hikes by the Federal Reserve, inflation reports, geopolitical events, technological breakthroughs, changes in consumer behavior. These are just a few examples of the forces that can send ripples through the stock market, affecting even the most well-established companies. In the upcoming sections, we'll explore how to effectively filter the overwhelming deluge of financial news, identifying reliable sources of information and developing a news consumption strategy that works for you. Get ready to sharpen your news-gathering skills and become a more informed, confident investor. In today's digital age, we're bombarded with information from all sides. The financial news landscape is no exception. This abundance of information can be overwhelming. Your goal is to identify reliable, trustworthy sources. Think of it like building a team of trusted advisors. Start with reputable financial news organizations. Look for publications with a long history of accuracy. Don't be afraid to diversify your news sources. Seek out perspectives from a variety of experts. This helps you gain a well-rounded understanding. Be wary of social media as a primary source. Verify information from multiple sources. Not all financial news is created equal. Develop a discerning eye for quality information. Congratulations on making it to the final section of our stock picking adventure. You've learned how to analyze companies, assess industries, and evaluate management teams. Remember, investing is a journey, not a destination. The market is constantly evolving, and the most successful investors are lifelong learners. Even the most experienced surfer never stops learning about the ocean. They study wave patterns and adapt their techniques. Similarly, as an investor, your education is never truly complete. Make a commitment to continuous learning. Read books, attend seminars, and follow reputable financial blogs. The more you learn, the better equipped you'll be to navigate the market. Don't be afraid to experiment and make mistakes. Investing is a learning process, and valuable lessons come from our missteps. Treat each investment as an opportunity to learn and grow. Seek out mentors and connect with other investors. Surround yourself with people who share your passion for investing. Join investment clubs, attend industry events, and engage in online forums. Remember, investing is a marathon, not a sprint. Embrace a mindset of continuous learning to weather market storms. Now, put your newfound knowledge into action. Start researching companies and identifying investment opportunities. The stock market offers incredible wealth-building potential for those who dare to learn, adapt, and invest wisely. You've now got the essential tools and knowledge to research stocks like a pro. Remember, investing in the stock market is a marathon, not a sprint. It's about making informed decisions, staying disciplined, and focusing on the long term. Don't be afraid to get started. The best way to learn is by doing. Pick a company that interests you, put your newfound research skills to the test, and see what you discover. Remember, the stock market offers incredible opportunities for those willing to put in the effort. Now go out there and uncover your own path to financial freedom. And don't forget to like this video and subscribe to the channel for more investing insights and guidance.